You're listening to the Place Northwest podcast, your digital resource for the latest insight and analysis on all things property in the northwest of England.
Hi everyone, Paul Unger from Place Northwest here. Today I'm joined by Shazia Bashir, Housing and Regeneration Partner at law firm TLT, sponsor of today's podcast. TLT supports corporates, public institutions and high-growth businesses on strategic and day-to-day legal needs. The firm has significant experience advising in the clean energy, digital, financial services, leisure, public sector, real estate, and retail and consumer goods sectors. For more information, visit tltsolicitors.com. Shazia, we're here to talk about green finance. Green finance is on the rise and never more so than in the UK's affordable housing sector. In this podcast, we'll look at the trends driving the market, the avenues available to access green finance, and the challenges faced by registered providers in meeting the UK's net zero carbon emissions target. Let's start with the market. Why are we seeing increased interest from affordable housing providers in green finance?
Hi, Paul, thank you. Well, there's a few competing priorities for registered providers in the market at the moment. So, obviously, there's the government targets to help alleviate the housing crisis. There's also recently been the fire and safety requirements. And then, above and beyond that, there is the target that the UK has committed to end its contribution to global warming by 2050, which, of course, is enshrined in the law now. So, to achieve all of these competing goals, I think registered providers need to consider alternative funding. Otherwise, there's a risk that they'll have to scale down their development plans to pay for existing homes. So, there's been some pieces of research that have been done which suggest that the UK's buildings are responsible for approximately 30% of the country's total greenhouse emissions. So, really, if the UK is serious about hitting the 2050 target, then we urgently need to do work, not just registered providers, but developers as well, to increase the efficiency of our property stock. I remember reading somewhere that we're looking at a potential cost of £100 billion. And in fact, L&Q, the UK's second largest registered provider of social housing, has only last month announced that it's going to be investing £1.9 billion over the next 7 years to transform its existing homes. And that will include energy works to reduce carbon emissions. It's believed that this investment is the largest of its kind in the history of social housing.
Absolutely, and vitally needed. So, what avenues to market are there for the affordable housing sector to access green finance?
Before we move on to the green finance, I think it's important just to flag that there is available the Social Housing Decarbonisation Fund from the government. And this fund was launched in October 2020. And last month, the first wave of the funding, which was in the sum of £160 million, has become available to local authorities and registered providers. And it's intended that a total of £3.8 billion will be available to be spent over a 10-year period. Now, there are quite tight timeframes to submit applications, but I thought I would raise that as a possible source of funding. But we have noticed since the introduction of the UK's net zero carbon target, green and sustainable finance has steadily moved up the list of priorities for registered providers. So there's been a lot of publicity and press around sustainability bonds that have been issued by registered providers, the obvious ones being the housing associations Paradigm, Asta, Clarion, Notting Hill Genesis, and more recently, Metropolitan Housing, which has secured a £250 million sustainability bond to help it build energy efficient homes and to retrofit existing stock. So in particular, Metropolitan Housing has made a commitment that all new homes will have at least an EPC rating of B. But earlier this year, Lloyds Bank agreed its first sustainability-linked loan with the social housing sector, and that has an interest rate reduction associated with improving the energy efficiency and decarbonisation of existing housing stock.
Yeah, it's really good to see the market responding and things like the green bonds coming through. And what about partnership working? Can partnerships help registered providers meet the growing list of challenges facing the sector?
Absolutely. And I think the first partnerships that we need to have a look at, and I feel that registered providers can do more, is with the local and central government. So I'm thinking their strategic partnerships with Homes England, for example, and GLA for sites based in London. And the beauty of the strategic partnerships is that rather than applying for grants on a scheme by scheme basis, strategic partners with Homes England can enter into a multi-year grant agreement, and that then offers the benefit of certainty for a RP, and it also enables access to Homes England's wider expertise in the area. In terms of local authorities, obviously they share the same or similar objectives of RPs of delivering more affordable housing. And so both parties, by working together, can achieve more, and especially because with local authorities, the housing borrowing cap has been removed. In fact, we've acted for RPs who are working in partnership with local authorities, where the local authorities provided the land and the RP provides the skill and expertise to develop the land. And once the development is completed and the properties have been sold, um, an amount of money is then paid back to the local authority on net profits that have been made by the RP. But moving on to some of what I call the more exciting developments in the green finance area, it's, I would say, our strategic relationships between the larger RPs and international banks. So Wells Fargo, the world's largest bank by market capitalization, as an example, provided a 50 million loan on a 7-year revolving credit facility to Hyde last year. And Clarion Housing has been doing similar um, relationships with Sumitomo Bank and has signed a 100 million loan with BNP Paribas. And the loan with BNP Paribas is structured as a loan linked to employment KPIs, which measures the number of residents Clarion supports into employment through jobs and training programs. So if Clarion meets the agreed targets set by BNP Paribas, it will receive a lower interest rate. Equity investment in the UK affordable housing is also on the rise. So from a private investor's perspective, RPs are seen as a safe investment opportunity because they have a large asset base, they have a good income stream, and in terms of their profile, their debt profile, it's zero default. So there's been several high-profile examples of such investment. And BlackRock recently agreed a 360 million debt facility with the for-profit registered provider Halo Housing, and Hyde has secured a strategic partnership with M&G Shared Ownership Fund to deliver 2,000 sustainable new shared ownership homes. So the homes will be owned by M&G's for-profit RP, and Hyde will manage and maintain the homes. The partnership will enable M&G to buy existing stock and fund much of Hyde's development pipeline, and Hyde will then be able to recycle the capital into the provision of new homes.
Really, really good to hear so many examples of things that are happening, and it's not just theory. There are deals being done and proper, meaningful partnerships being formed out there. Now, I just want to drill down a little bit into biodiversity. How will the financial markets' growing interest in biodiversity provide opportunities for registered providers?
So, biodiversity compared to climate change is largely an underdeveloped area, but momentum is now growing for biodiversity to be a factor in providing finance. So, on the 25th of September of last year, 26 financial institutions around the world, including AXA Group, HSBC Global Asset Management, and Triodos Bank, launched the Finance for Biodiversity Pledge, and the signatories, currently of which there are 55, have committed to protect and restore biodiversity through their finance activities and investments. The environmental bill applicable to England is likely to receive royal assent this parliamentary term, and that includes a mandatory requirement for all new developments to deliver at least a 10% improvement in biodiversity of the land being developed. So developers as well as registered providers need to be thinking about these requirements now to prevent costly delays later. So specifically thinking at what can registered providers do? Well, constructing homes using green or sustainable finance not only extends to the materials used in the construction, but the wider estate and environment within which the people live. So you'd be surprised that certain facilities can make developments more attractive for finance providers and they don't have to cost much. So I'm thinking there of items like well lit communal gardens, shared allotments, greenhouses, eco friendly playgrounds, and the planting of plants and wildflower gardens would all be examples. In my view, very low cost strategies. But then there are other things that RPs can also be considering, and that would be the addition of extensive recycling facilities to include clothes, shoes, composting, food banks, bike stores, charging points for electrical cars. And perhaps also what RPs need to be thinking about is considering where energy is sourced from on their developments. Heat pumps, we know, for example, are more energy efficient.
Yeah, it's really interesting to hear the biodiversity solutions that are emerging around the estate. It's urgently needed that these become mainstream and not novelties. So, throwing the eye forward into the next year or two, we've seen some of the evidence of things that are happening already. How do you think the market will develop over the coming months?
So I'm expecting the volume of KPI linked loans to continue to increase, and certainly that the evidence of that is coming through, and our banking teams are working on those types of loan agreements and loan arrangements. And also, I think the reason that these types of loans are going to continue to increase is because there are certain regulatory expectations as well. So I'm aware that the National Housing Federation has produced a code which sets out certain requirements. Although it's voluntary, it is nevertheless something that are tending to follow, and that sets out certain requirements around ESG matters. And also, we mustn't forget that registered providers are already going beyond their core business of providing affordable housing by delivering other benefits such as supporting tenants in relation to employment, training, homelessness, and social security. So they're already in a unique position to lead the way in demonstrating how to overcome some of the challenges in terms of retrofitting. And I think partnerships with banks and private equity investors are also going to become increasingly prevalent in the sector. And in fact, the government is also looking to increase the amount of private capital entering the sector. So I feel that there is a real opportunity for RPs to tap into investment from funders who are seeking environmental, social, and governance related investment opportunities.
Absolutely. And are you convinced that the government is doing enough? Are there more things you would like to see coming down the line?
I think certainly it's encouraging that the government is looking at alternatives, because I think it's fair to say that yes, it's great that we've got the funding available from the Social Housing and Decarbonisation Fund, for example. But if we're looking at a cost of 100 billion, that's not going to be sufficient. So yeah, I think it's something that the government could be doing more.
And in terms of the conversations that you have when you're sitting across the table from clients, is this agenda, is this item getting more serious consideration now, or are people still very much at the start and just talking about it?
I would say if we were having this discussion a couple of months ago, it would have been very much at the start of the process, and it wasn't really being forming part of the business plans of clients. But now I think there's increased awareness. We've certainly got clients who are aware of timescales for applying to the decarbonisation fund. I think it's definitely the activity around that has ramped up. And as I said earlier, if we're realistically going to hit the target, then there needs to be clear and urgent focus on this area.
Quite right. Well, we look forward to seeing how this story unfolds over the coming months, and hopefully you can join us again and we can catch up on the progress. Thank you, Shazia Bashir, Housing and Regeneration Partner at law firm TLT.
Thank you.
This episode was sponsored by TLT. Please visit tltsolicitors.com to find out more.